What is going on, you wonderful people, ladies and gentlemen? Hope you guys are doing well this evening. Today, we got to talk about that mindset that you have to fix. If you want to be like real talk, if you want to be consistently profitable without feeling like you're gambling and lean on this for a consistent side income or just an income overall, you got to fix your mindset. And what does it mean when I say fix your mindset with trading? Well, first, you got to figure out why so many people are failing. Like, what's the main driving factor? Being here 6 years, I came to the same conclusion every single time I've seen someone fail or even my own personal failures. And it always boils down to the same two things. They fail because they rush the process, try to make it happen too quick, like an overnight success. And number two, they're addicted to the feeling of actually trading, the dopamine, and they need a setup, right? But if you just flip that on its head, right, and you flip from that mindset of needing a setup, instead, you allow stuff to come to you naturally and you just aim for one high quality trade per week and you capture that with confidence, right? And you just do that week in and week out, compounding equity. You're going to beat everyone else. You're going to run laps around them, especially if you're compounding equity. Now, let's just run some basic numbers real quick, okay? Let's say you across the screen right now. Okay, what's the game plan for the next 9 months? Here's a crazy stat for you to think on. You can literally capture just 2 trades per week, for the rest of the year, which is again 9 more months, 2 $400 trades on whatever account you're trading. Just one account. This is assuming that you're not compounding equity, interest, or using multiple accounts. Just one account, 2 $400 high quality Model 3 or 4s per week. If you do the math on that, that's essentially going to be a little over $30,000 in your pocket by the end of the year. Now ask yourself, what can $30,000 do for you? I'm sure for a lot of people, an extra $30K cash in their pocket is going to help a lot. Now, what does it take to make those $400 trades per week? Newsflash, it only takes a few micros in this market. Yes, 1 or 2 micros, you can achieve $400 easily, just like that in one trade, right? So yeah, just something to think on there. If you guys reject that and you truly just get into a flow state of not needing a setup, but also not being fearful when the setup does perform, and you take it with confidence, if you really just find that fine line, you will truly, once again, like I said earlier, run laps around everyone else in this industry where 95% fail. So with all that out of the way, obviously you guys can see that I made 1.4K on my live account here today. All right, and P&L on the month, man. As you can see, this is kind of not the best performance I've ever had on a monthly basis. Obviously, it's still profitable, but overall, if you skim through the months so far this year, really showcases what you can, what's possible. And this is like true consistency in the market. And keep in mind, this is all cash to my pocket on this live account. So yeah, it's possible. This can be a really, really good side income for you. Obviously, sometimes you're going to hit rough patches, but that's really just a test. Like in my heart, I know it's fine because when you actually have an edge in the market, like that's proven through data. I mean, how can you get discouraged? Because you know that over a long-term basis, based on your data, your stuff's like it's still going to be there. The setups are going to be there. The opportunities are going to be there. Only thing is, some weeks and some months, it's going to be really, really good. Others, not as good and not as frequent. Okay, so obviously March was really the only month in recent times where I struggled a little bit. But through trusting my edge and not revenge trading, that's really, really important. I'm still able to come out on top, which I'm honestly very, very proud of that, considering how tough March's delivery has been. So, yep, that's pretty much it, guys. Aside from that, though, I kind of want to just dive into the setup here, guys, give you guys the mechanics of what I was truly looking for, what went into the model number 4, everything just surrounding it, why I entered, why I was targeting the targets that I was targeting, all that good stuff. So let's just dive right into it. Now, what was so key about this setup here today, number 1, was staying in sync with the overall order flow and trend. Like if you just zoom out, like, yeah, it's not great price action, but we're obviously in a downtrend, right? So therefore, I'm going to logically look to stay in sync with this downtrend to the downside. If you go to the daily chart, looks pretty obviously bearish, right? We even created a swing high here on the daily chart and left that. That's key market structure. On the hourly chart, obviously had this crazy manipulation to this double top. Ever since then, we left this intact as an intermittent term high, solidifying that bearish structure even more. We left this wild, wacky range last night, with a large dump, right? And then we had this 930 manipulation leading into the rest of the expansion into these very clean targets. So number one, me identifying, okay, what's the trend? What's the order flow? What's the market structure suggesting, right? That's bearish. Step number two is I got to identify really, really obvious targets. So really, really obvious targets are going to be time-based old lows, equal lows, trend line lows, things of that nature. So this first target here was so key because this was the exact low, right, of the Iran news candle, right? So anytime you have a news candle like this, you always want to reference the high and the low of it, right? And it's going to work as a really, really strong magnet on price because, again, that is a time-based sell-side liquidity pool. Now, this other target down here, number one, this is a double bottom, so it's a clean, obvious opposing target in and of itself. Number two, this is just simply an old key daily low in the market that's been untapped in a bearish market. As simple as that. Old key daily lows, time-based lows, double bottom. That's all I needed to see. And if you consistently look for stuff like this and find the logic that I'm about to show you here, yeah, you're going to get really, really good consistent payment to targets just like these, okay? So purely going off of the checklist, right? Number one is kind of recalibrating at our 930 opening price, right? So here was 930. Obviously, as you can see, we indeed manipulated above the 930 opening price to sweep out a nice short-term high. All right, so what is this doing, guys? This is further solidifying bearish market structure once again, but now intraday. We manipulated above 930. We created a swing high, lower swing high to the left, and a lower swing high to the right. That's an intermittent term high. And then what happens is we displace, leave that intermittent term high now after solidifying more bearish structure, and now we create a model 4 gap, which I already had annotated here. If I zoom in for you guys, here is that gap in price that is formed. Now, what's so key about this gap is number one, what I just said about market structure, and number two, this is a solid gap formed in the direction of those really, really obvious targets, right? So this is what I'm going to look to utilize for my model entry and, to place my stop loss to then look for these targets. So once this gap is formed, what I'm going to need to see is something very specific happening once we tap up into that. And you're always going to find that typically on your 1 minute chart. So we're going to dive down. Okay. As you can see, 1 p.m. hourly candle opening price right here. We drove above that, swept an old short-term high right here inside of tapping that 15-minute gap. All right. That's the key signature that I need to see. Sweeping an old high inside of the model 4 gap on the 15 or hourly chart. Now for the entry, okay? Now, yes, I know a lot of you were looking at this like, oh, this isn't really that light bulb. And I would say, yeah, I would agree with that. Okay, it was not light bulb on the 1 minute time frame this time. However, this is more of an aggressive, like really, really confident conviction play. Okay, because the reality is, the light bulb expansion is just an entry mechanism that is preferable for, getting the best fill and highest quality reversal point. So what I was looking at here is number one, this is so key because we're opening at 1 p.m. opening price. So we trade above that 1 p.m. opening, and this is working as a hourly PO3 idea. That's what made this so high quality, right? So we accumulated, manipulated above 1 p.m., delivering that model 4 gap plus that swing high, and then we collapse right back down below that 1 p.m. opening price, inversing the exact fair value gap that delivered us up into the 15-minute gap. So as soon as I saw that, I was like, all right, I don't even need to see anything else at this point. Like literally all stars are aligning at this point. I'm super convicted in these targets. I'm going to enter right here. And that's exactly what I did. I took my entry, wrote it out to the first target, and wrote it out to the low of the year. Okay, now if we back it out to the hourly chart once again, okay, I want to show you guys. Remember how I marked this out as an intermittent term high here after 930 manipulation? What was actually so key about 1 p.m. and 12 o'clock here was the fact that we already cemented this hourly swing high and changed our state and delivery below these up candles right here. So everything is just pointing to like classic bearish market structure and order flow 101. Like in a bearish market, you want to see up candles be inversed and respected. Did we do that? Yep. Changed our state and delivery, created that swing point, and then expanded deeply, creating a model for gap. So this is one of the easiest model fours you'll ever catch in the market, because the market's proving itself, right? It's proving that it wants to be clean. It cements that intermittent term high, and then it trades away so aggressively that it leaves behind that gap and price that we have right here. And we look to utilize that to obviously take the continuation, right? So this is like really what made me get into the market. Like obviously you guys saw how uninterested I was in asserting myself. But once I saw this with it truly proving itself, I just had to get on here. I alerted this A+ live time for this very reason. Everything that I'm explaining here. The 3 core elements to any high quality trade. Really obvious high quality opposing targets. Staying in sync with higher time frame order flow and market structure. And then identifying that model for gap in the direction of those key draws, right? Those 3 things tying together are like going to be always going to be your easiest setups to catch in the market. The only catch though is that damn waiting thing. You know, you got to wait for it, okay? And if you wait for it and you make it count, catch one of them per week, you compound equity, you can eventually be a rich man, okay? All right, guys, so real quick, I forgot to cover stop loss placement in the video, so apologies for that. Okay, where do I put my stop loss on trades like this? Okay, so you went down to the 1-minute chart, right? Obviously, my entry was after we inversed this time-based 1-minute gap, okay? So my real entry was right here, and my stop loss actually went above this model for a gap. So if you went to your 15-minute chart, okay, I still have to weather key levels. I can't just short here and have this ultra tight stop loss because I'm opening myself up to getting easily stopped out in a high volatile market like this. So my stop went right here. And the reasoning behind this was, number one, I was covering obviously the model 4 gap, and I was also covering this up candle in the market right here. Okay, so I'm giving it space because I know that sometimes model 4 gaps can be respected, but a lot of times they're like kind of wick up, right, and then close and then drop back down. So I'm giving it breathing room, especially in a market like this, and especially when my full take profit is well over 200 points. Okay, so if I'm going for like 250 points, I know that I'm going to have a significant stop loss. Okay, so this was my stop loss placement for this specific trade. All right, and yeah, it's as simple as that, guys. Okay, covering key levels, giving it space and breathing room, especially in this volatile market, adjusting and accommodating the risk for 100-point stop losses. Okay, so whatever you got to scale down to, I don't care if you have to scale down to 1 micro, you do that. If that is going to be a part of your risk management plan, and, you know, kind of eliminate micromanaging. Okay, so that was it. So I hope you guys found this one useful and helpful and insightful, all those great things, all the above. Go ahead and comment to me in the Discord if you feel like there's something I should have covered that I didn't. And also just overall give me feedback and let me know if you guys are learning something. I really would appreciate that. Other than that, God bless. Peace, guys.